Okay, let's get across the outlook for today. We've got Chris Weston joining us this morning from IG Markets. Oz Minerals, a stock that you're watching today, Chris, on track to meet guidance. What did you make of those results?
Yeah, it's good results, Brooke and James. I think the stock, it's not open at the moment. I'd imagine it'd probably be up about 1% at a guess, to be honest. I thought the numbers today were good, certainly against the consensus. They were marginally better. I think if you look at the gold numbers, certainly they were better. And we saw the copper offset, or the gold being offset against the copper. So we saw that I think the grades of the gold were certainly a lot better than the market been looking for as well. And I think that helped. So if you actually look at the costs, as you said in the synopsis there, have been a problem, but the cost numbers just under that 119 per ounce is certainly a lot weaker than or certainly a lot better than what the market had been interpreting. If you look at the way that they've been going down things as well, I mean, they've been really ramping up the underground ore mining. Now that's obviously a higher cost than the open pit mining, so they're obviously trying to extend the life of Prominent Hill, which is due to expire or run out of capacity by 2018. The big situation for shareholders, and probably the very exciting thing for shareholders, is exactly what's going to happen with Carrapateena, because that's the one that comes back on, comes full into life by approximately 2021, and that's the one which a lot of analysts at the moment who follow the stock closely suggest is the big kicker, is the very exciting situation, given it's very, very much underexplored. But I think the rhetoric we've seen from the company today is that Carrapateena very much remains on track. The quality is going to be there, and that's going to be a big kicker and drive the share price longer term, because obviously we know they have the cash. So from a quarterly basis, the production numbers are better than expected, helped out by the grades of gold. The cash costs were below what the market was looking for. Everything seems to remain on track at the moment. So I've just got no reason, without the macro, the sort of leading what we've seen from Wall Street and the metals prices, that for me this stock should be up about 1% on open. It's a good result here.
Chris, is it enough to sate, if you like, any appetite investors might have for Oz Minerals to look at acquisitions? I mean, there's been a lot of interest in their interest, if you like, in terms of Sandfire. As you mentioned, they are sitting on a heap of cash, and it's obviously flogging off a lot of their assets when they're in a little bit of a bad shape. But do you think people want to see them grow through acquisition as well as organic?
I think so. I mean, I think a lot of people had been, this Sandfire situation has been speculated on for years now. I mean, it's one that, they would have liked to have picked up at the lows rather than wait for Sandfire to have a significant rally and trading up to near 52-week highs. If they're going to do that, there's going to be a few shareholders who have said, well, you had the cash before, perhaps you should have had the insight to take Sandfire out when it was trading significantly lower than where it is at the moment. So perhaps that's pouring some cold water on Sandfire in the short term. But we know that they've got that big cash. I can't remember it off the top of my head. It was about 600 billion or so, 600 million, or I can't remember the exact number, in cash. It was a lot of cash, and that was why people were saying that they can take out a company to that sort of magnitude. Obviously, they have the big stake in there. But I think Carrapateena is the one that, if they're going to grow organically, that is a quality mine. That is a really, really key mine for these guys. And I think it seems that they're going down that road, that they're going to try and develop Carrapateena, given the grades that they're coming through, the potential production numbers that are going to be coming through there. It just takes a little bit longer, and there's that kind of, does Prominent Hill finish in 2018, and then we've got to wait for 2021 to start production again. So you've got that kind of crossover risk that comes into as well. So I think you would like to pick Sandfire up a little bit cheaper than where it is at the moment, but I suppose the other good situation is that this Carrapateena mine, and they've got other things as well, is certainly one to be excited about for longer term.
Chris, in terms of company news, I can see we've got Oil Search production guidance maintained for 2013. That's just come through while you're speaking. Quite a bit of AGM and company news around. I think it might be worth mentioning TEN. I can't see the shares online yet, but in terms of watching specific stocks today, this could be interesting. Talk of a new bid, $110 million for that outdoor advertising unit from private equity. What do you think the market will make of that new price?
Yeah, well, I think anything that just avoids a capital raising, Brooke, is good. I mean, Citigroup came out with a note either yesterday or the day before saying that they value the iCorp business at 120. Now, the 110 that the FINA are speculating on is a 24% reduction from the 145 that was previously announced and previously agreed on. So I think what you've got to remember is that the 110 includes a 3-year deferred payment of 25 million. So they'd receive an upfront payment of about 85, and the remainder in a 3-year time period. So it's all about costs. It's all about the balance sheet with TEN. You can trade this on the short term. In terms of how they go on an equity raising, and I think that's why we saw a big rally in the company yesterday. And I think also you'll probably see a reasonably good rally in the stock today. I mean, I think we're going to see that situation where it is a lower price, but let's look at the debt situation now in 10. I mean, they've reduced debt from over 400 million a year ago or so to the recent report which showed that they've got a net debt position of 263 million. So if you get that 85 net debt upfront payment and you take that off the current net debt position, you've left with a net debt position of 178 million. Now, if you get the consensus EBITDA number, which the Bloomberg consensus at the moment is around 68 million, you've basically got yourself in a situation where even if you take that lower price, they're going to be well within their debt covenants on about a net debt to EBITDA of 2.6 times. So it's certainly less than the 4 times that they need, which gives them that headroom, and it certainly would go a long way to pricing out an equity raising. They really don't want to go to the market with a full bit, with the champ side of things completely off the table and have to raise between 100 and 200 million, especially with the price at the moment. So I think this, if it does get agreed upon, even at a lower price, will certainly go a long way to reducing that side of things. Of course, you've got to look at the interest cover. You know, big shareholders like Perpetual, this is a major concern for those guys at the moment. So I still think this is a good price. It's lower than what most people see as the proper value for the iCorp business, but it alleviates that equity raising time. You know, at desperate times, desperate measures. The other side of things, I think if we do see this spike up and we do see this agreed upon and equity raising gets priced out, is how does the stock trade going forward? You know, their recent report was very poor indeed, you know, not just from an earnings perspective, from an outlook perspective as well. You know, the vision is subdued. The free-to-air market in September, the ad market was down about 5.7%. You can actually look at the consensus EPS for next year, or for this full year coming up, and see that's at 1 cent at the moment. So they're just going to break even. And if you put that, the share price at trading at 30 cents, they're trading on a forward PE of 30 times. You compare that to Seven West on 6 times. You compare that to News Corp, which is, you know, having a strong rally of late, and that's still trading on 14 times. The stock, for me, once you even price out an equity raising, is still very expensive compared to the other stocks out there at the moment. So I wouldn't be touching it personally.
And their programming launch for 2013, actually this morning we had our cameras down there. Full coverage will be on Media Week with Bridie Barry and James Manning on Thursday.
Yeah.
We might also have a little taster for you a little bit later today. Be interested to see what the mood was like down there. I want to get your thoughts, Chris, if we can, on markets. We might move to the US in just a minute, but firstly get your views on what we're likely to see today. Look, we've spoken particularly last week on Market Day with John Noonan. You were very bullish, talking about an underlying risk sentiment that was there, buying on the dips. Is that still the case, or has yesterday thrown a little bit of a spanner in the works? I mean, the buying didn't really seem to come in. We closed off the lows, but still down about 0.7%. Maybe a little bit disappointing.
Well, I think from an index perspective, that's probably the case, James, because you're seeing this situation now with the banks. We've seen a lot of brokers in the last few days downgrading the banks on a valuation basis. Now, you know, I've been saying for some time now that if you look at the range over the last 3 years, the banks now are trading on above that range in terms of a price to book. So they're not going to get a huge amount of love, but at the same time, given that cash rates are coming down, term deposits are coming down, they've still got a very healthy dividend. I just really can't see a mass exodus of the bank stocks. People will be looking to accumulate, and that's why I think the index as a whole, given the weighting the banks have got, won't fall that far. I am bullish on probably the more sort of cyclical sectors at the moment, given what we've seen in terms of emerging market growth, the signs of Chinese stabilisation. Okay, you can make an argument that the electrical demand is still quite lacklustre, both in Japan and China as well. But the industrial production numbers, the export numbers, those bits and pieces are showing signs of bottoming, and we could get a technical rebound in Q4. Now, my bullish stance was premised around the sector that hasn't taken part. And if you look at the big rally we've seen from the June lows, it has been, you know, dividend-paying stocks, it's been the banks, it's been the healthcare names, it's been the really defensive earnings, because no one's believed in that rally. We've climbed that wall of worry or with no belief at all. Now, I think if you're going to take part in this rally, the sector that hasn't taken part is the materials sector, and I think we're starting to see those flows. I mean, BHP, Rio have broken out. We saw yesterday both stocks open weaker, and good buying coming into the lows. And from a market perspective, you know, last 2 days, you're right. I mean, we've seen the market open lower, and we've traded higher throughout the day. People have come in and bought. A lot of that buying, though, really depends on what we're seeing in the Nikkei. We saw a weekly reversal last week, and I think yesterday part of that buying was the fact that the Nikkei was down about 1.8% and actually finished in positive territory. So, of course, today we're going to have to look at Asian markets very closely, look at China, look at Japan, and obviously that will have ramifications on our market and US futures as well. So I'm bullish on certain parts of the market. I just think at the moment banks will be supported with that dividend yield, which is still compelling. But on a valuation perspective, then I just really can't get too excited about the banks, and hence why the market, I don't think, will get overly overextended from here. I just think from a technical perspective as well, you can get the fall that we saw from 2007, the all-time high, down to 31.20, which was the bear market low that we saw during the GFC. We've retraced 38.2% of those gains now. We closed above that on a weekly basis. Again, another quite positive technical sign for me that the bulls are firmly in control of this market right now, James.
Chris, we have to leave it there for now, but we will chat soon. Thank you so much. Chris Weston from IG in Melbourne. We will take